Hi, folks. Best-selling author and certified tax specialist Navy Dowdy here. In this week's tax tip, we're going to talk about the idea of don't let your financial advisor off the hook when it comes to taxes. Don't let them off the hook when it comes to tax planning. Many people work with brokers or other financial advisors, buy and sell stock or real estate. And many people now, because of the internet, also have become their own stockbrokers and own their own real estate agents, doing their own research and trading on various platforms. Whether you're a professional or you do the trades yourself, you still need to hold your stockbroker or you accountable. What do I mean? If your broker is helping you buy and sell, they had to take a series license of some kind. Sometimes it's an RIA, Registered Investment Advisor. They had to take a Series 65 exam. If it's a representative of a broker-dealer, perhaps they've taken a Series 6 or a Series 7 exam. There are other possibilities, but the point is that these exams are difficult. If they're a real estate broker, they had to take the real estate exams. They take a lot of learning, and much of that learning is about taxation. No stockbroker or real estate broker that's licensed out there in the world can ignore taxes and then blame a lack of education. To get the very license they had to help you trade, they had to know more than just the basics. Also, the organizations themselves, whether registered investment advisory firms, broker-dealers, real estate agencies, other organizations that buy and sell stocks or real estate, have compliance requirements that now demand a fairly high level of fiduciary information, separate from behaving as fiduciaries. That's another topic for another blog sometime. And questioning includes liquidity, tax brackets, and other critical items that about you that they must know before they can make their recommendations. On the professional side of the house, if you hear something like, well, people pay taxes, or well, don't let the tax tail wag the dog, you're talking to someone that is unconcerned, but not unaware. They don't want to deal with the topic, or they may have too tight a constraint from their compliance department, or there might be some other reason. For whatever reason, in our humble opinion, this makes them perhaps dangerous to be dealing with. Whether it's because of a lack of knowledge or a lack of caring, either way, there's no excuse. If their hands are being tied by their compliance systems above them, then those are dangerous compliance systems that they don't allow integration of tax information when you trade, buy, sell, or acquire securities or real estate. Taxation can be an important determinant in whether you win or lose, because taxes, remember, are probably your biggest expense. That's on the professional side. In the last few years, especially, many people skip using a professional and do it themselves. Although you have an excuse for the lack of understanding of the tax code, since you've not been forced to take an exam, you probably should be more informed. Although I've met many stock traders that do as good a job as the average broker, abilities vary widely from person to person. Unfortunately, most have a linear view of their success. I've turned 100,000 into 120,000. I'm great. I made 20%, is what I hear. With the portfolio still together inside a qualified or non-qualified account, they haven't yet actually made anything because they haven't sold those securities, and that value could be less in a matter of moments. The markets can be volatile, as we've learned, and the hard way just recently and also throughout history. Their account may be up today, but without action may be down tomorrow, resulting in no real gain. However, if they do take action while the account is up, do they know what the tax consequences will be? Too often, that answer is no. They made 20% after solidifying their gain, then didn't realize what has to be done to them until they file their taxes the following year. Often, that event will cost them more than just capital gains tax, and that's particularly true if it's within your retirement account. There are many tiers and secondary actions that take place in taxation. For instance, if you trade stocks and don't hold them for at least a year, those profits are taxed as ordinary income. You may end up paying 35% federal tax plus 6 or 7% state income tax. Since you are your own trader, you're not forced to take an exam. You don't have to know these things, but someone should. Nobody, you or a broker, should truly be allowed to manage your stock portfolio without a basic course in taxation under their belt. Go to H&R Block, take their 10-week course. Pay special attention to capital gains. If you're going to be a stock trader, understand the difference between short-term and long-term gains and losses, carry forward losses, the basic terminology of keeping your winnings or sharing your winnings with Uncle Sam, or take advantages of losses by getting tax breaks on them down the road. You should know that topic. If you use a broker and they say, don't let the tax tail wag the dog, then you need to use a different broker. The topic should be an open, honest discussion where they demonstrate that they care, they have the resources to find answers if they don't actually do it themselves. Not doing it themselves is fine. But they can't ignore the subject altogether. They need to be able to help you learn what you need to know, even if it's not the favorite part of the job. It's still well within what they learn in order to assist you, and they should feel responsible. But what if you love your broker? They don't engage in tax planning, and you don't want to learn either? Then engage a tax planner. They're all around you. They're often also licensed brokers, perhaps a better choice for you, but nonetheless, you could have one stockbroker that does your trading and another that you hire just to do the tax planning. The cost you would incur to hire an external tax planner will be smaller than the tax bill for getting it all wrong. Know what you're doing. Don't let your stockbroker or other broker off the hook, even if that's you. And many of you may not be aware that the wealthy elite have access to what's called a family private office. And what that means is they have access to certain strategies and certain types of advisors that most of the other 99% don't have access to. Fortunately, over the years, I've been able to put together a family office with some very wealthy clients that you can get access to by working with me. It's a virtual family office where we help people have on taxable family wealth, try to protect their assets from crashes, market crashes, if they want. And we only work with a few people a year, so you have to qualify. So if you're interested, down below there's a link where you can schedule a 30-minute call to get on my calendar, and we can see if that would be a good fit for you. Go ahead and do that now if you want to find out about that. And also go ahead and subscribe to this channel if you want to get tax tips. And if you're not a fit for that yet, you can still find out things on this channel, so please subscribe. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.